Hi, everyone. Welcome to DomainSherpa. Today is an episode of Down the Rabbit Hole with Yoni, Ammar, and me, and Drew also makes an appearance as well. On this show, we discuss the recent crash in crypto prices, and we do a deep dive into decentralized finance, or DeFi, as there's a ton of exciting stuff happening right now in that space. All this is coming up on Down the Rabbit Hole here on DomainSherpa, where all roads lead to domains. So let's go.
It don't matter what you say, there ain't no way that you messing with my team today. It don't matter what you do, I will not lose.
What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, aka JT, aka Jay On, and I am the host and producer of Domain Sherpa, where all roads lead to domains. Today's show is a down the rabbit hole, right? So as we say here on Domain Sherpa, all roads lead to domains, and that often means domains lead to everything else. So we often find ourselves going down into different topics and things, some related to domains, digital assets, NFT, crypto, and sometimes just going off on the tangents about completely different stuff that we just want to talk about. So we appreciate you all being here with us. And with that, let me go ahead and introduce my co-host. So folks that I know you're familiar with, but I'll start out with my man below, my man Ammar Kubba, aka a marvelous Marvin Hagler, aka King Kubba, aka Dr. Gonzo, aka Danny Ocean. What up, dude? Welcome.
What's going on?
I told you.
Marvelous. I like that.
Yeah, a marvelous Marvin Hagler. Boy, what up? And Dr. Gonzo from Fear and Loathing in Las Vegas. Everything with the Vegas theme for you, my dude. And then over to my right, we got my man Yoni Belousov, aka Young Money, aka Blue Steel. And which that's how we roll. I don't know if you guys have watched when you watch the show back, we've been putting the snapping in like the picture. So on Yoni, like the last show, it was like, Blue Steel, and it was the Zoolander shit. You know what I mean? And we'll do things. We've been upping our post-production game. You know what I'm saying? So
you guys are. I actually was watching a couple of the episodes. The intro now is fantastic.
Oh, thanks, man. Yeah. The intro, we got we got a new commercial. We got even on the Domain Sherpa review now, we're keeping score with like the live scoreboard as it's going on. And and then the other show, and I forget what we were doing, but we were saying because Yoni because he took that half a point. Remember, you took the half a point. And so Billy does it's my brother who does the post-production stuff. We're like, oh, he's going to be fired up having to do all this extra work. So he threw like the Dogecoin thing on Yoni's face for a while during the So it's like, hey man, we're just out here having fun, man. We're bullshitting and talking about the stuff we want to talk about. And but people have been super and that's the other thing to the audience, man. Appreciate all y'all, and the feedback on a lot of the recent shows has been super positive. And, of course, we appreciate everybody tuning in, and I say on a lot of the shows, just, leave a comment. If there's something you want to chime in, somebody wants to, bring up a certain topic, you want us to talk about something, you got questions, whatever, just holler at us. We're around, we're accessible. And, this is very much a community kind of vibe. And, so it's all good. So definitely, so holler at us. So anyway, with that, let's get into the topic of the day, because I think we're all following the same thing, which is the crypto crash of 2021. You know what I mean?
Yeah.
So it seems like it's bouncing back a little bit. So, this show will air in a day or two. So by then, it's going to probably be, who knows where things, everything moves at the speed of light around here. But the, I think we saw, potentially it bottomed out and now it's bouncing back up again. But let's talk about, what do y'all think? For context, we saw Bitcoin drop down to almost all the way down to 30K. And
just over.
As of now, this is Wednesday, Eastern time around 11 a.m. So, it's bounced back up into like the 36, I think.
37.
So see, we're already getting back, man. We're getting back.
Yeah.
So, and I know both of you guys are pretty heavy, to say the least. So how you feeling? What's your thoughts? Talk to me. What's good? Did you expect that we were going to see this pullback? Is this what y'all were expecting? And where's it going?
I think we have more to go. I think this is a head fake. I think it's going to break 30 potentially. And I'm kind of waiting, but I want to buy some more, but I think it's too early to, maybe buy a little bit here, but I'd rather, I think it's going to come down a little bit more on the Bitcoin, and same with ETH. I'm actually super bullish. I think I've told you guys on ETH. And then I've been reading about another one, Solana.
Oh,
and
we're gonna talk about some Solana, boy. We're gonna talk about
Okay.
Solana.
Yeah, so I don't, to be fair, I don't know a lot about it, but I'm trying to learn more about it. I've been listening to a few other podcasts. A really interesting one's called Modern Finance, which
Okay.
is Kevin Rose,
Okay, cool.
and he has a pretty interesting podcast, and he's really into the DeFi and stuff. So, but anyway, I think there's going to be a lot more volatility to come. I think a lot of the newbies are going to get freaked out by this craziness, and so many people have just been putting money in, and that probably are putting in money they don't have to lose. So I think they're probably freaking out, and they're probably selling, right? And that's going to just keep happening.
Well, yeah, and I think it's interesting. So let's talk. I think you've got some delineation, right? You're gonna, we've got some of what's happening from an institutional standpoint, right? And then some of what's happening, called on the retail side, right, with the more casual, investors and everything else. And yeah, I mean, unfortunately, it's sort of the success that almost every coin has had over the past, 9, 10, 12 months, has given a lot of folks probably a sense of security and confidence that is, unrealistic in the long run, because, there's going to be dips. Like, we're going to have these kind of corrections and pullbacks. I mean, when every coin is up 300, 400% minimum, and you've got shit like Doge up to 6,000% and things like that, like,
Right.
Over time, it's, there's going to be, just like all markets are going to have, we're going to see, in most cases, where the fundamentals are good, or, the right pieces are in place. Over time, it'll continue to trend upward, but you're going to have, it's not all just going to be a straight line, right? So yeah, and I think you're right. And what I think also, to me, is, I've heard folks talking about how, people borrowing, buying on, like, almost on margin, leverage, that kind of stuff, leverage buying, talking about, hey, I put in $500 in Doge and turned into 300,000, because
Right.
it was like, then all of a sudden everybody's trying to recreate that with other, like, Shiba Inu.
Ooh, Shibu, right? Yeah.
Hook is another one that folks are talking about, and Akita coin. And they're actually,
and this is also why all of this is happening, actually, because I mean, it's just, there is a lot of leverage involved, and people might, let's say, bet on something like the Shiba Inu while collateralizing their Bitcoin on the back end to allow them to leverage it up. Both Shiba Inu going down and then also their collateral going down means they're going to get liquidated. So effectively, they sell their Bitcoin position without even necessarily wanting to sell it.
Without permission. It's all automatic. That's the beauty and the double-edged sword of DeFi, right? Because
exactly, this is pure capitalism. There is no no stops, nothing. It's gonna go down to as low as it can until there are buyers.
Well, and I bought some last night. I bought some this morning. I bought some 5 minutes ago, and so, like, I'm just like,
I'm buying some right now.
Exactly. I just hit buy. I don't know. It's crazy. It's letting me do that. And, but
are you buying just Bitcoin?
Well, no. So, I'm buying Bitcoin, and then I'm moving it around. Like, so really, like, a lot of what I've been up to, and, talking to Yoni and Drew too, who, Drew has got family in town, so he's tied up, so he can't be hanging with us today during the bloodbath, but I'm sure he's feeling really good.
He's probably freaking out all
he's hiding.
I know. I keep messaging him, and he's freaking out a little bit. I guess
his folks are in town. It's literally probably his mom being like, Drew, like, we never hear, why are you under the bed? You know what I mean?
Right.
Like, I can't come out. No, I can't come out. What's Bitcoin at? What's Bitcoin at? And it's so yeah, he's having a bit of a rough one. I mean, here's the thing, but at the same time, the folks that are seasoned, they anticipate this, they understand it. We've been moving a lot of stuff from Bitcoin over to Solana, and then getting into, like, and this, we'll talk about this a little bit too, Radium and Serum and that kind of stuff. And actually, even Drew tweeted about it, like, the other day. He gave, like, he had a tweet where he was like, I have to apologize. I've been a Bitcoin maximalist, and he's been into ETH and some other stuff, and and all that. He's like, but now I've seen the Yoni basically showed him the light, man. Like he's like, yo, I've seen the light. Like now DeFi is where it's at. This is gonna change the game. My worldview's been cracked. Like what up, and it's like, but it is pretty crazy. The DeFi stuff is pretty wild, and
Yeah.
and I do think it's the future of finance. I mean, when you see, so we might as well just kind of dive into it now. I mean, when you look at, and I look at it from a very, sort of basic standpoint, you've got a savings account that's going to earn you set minimal interest in the bank, right? Now you've got these opportunities through these swaps and through staking and through yield farming and everything else, where effectively, you're taking, and in the case of kind of some of the stuff that we're doing, we're taking Bitcoin, moving it into Solana, moving it into like the, radium farms basically, but then, swapping Solana for Ray, Serum, USDT, USDC, pairing the tokens and then putting them in the liquidity pools. And then there's basically an interest rate that you're paid, you get a, yield off of investing the tokens into these liquidity pools. And so, but the APR is like 100%, you know what I mean? So
But
it's like,
my understanding is those are super high risk, and there's two different, and you guys can, I'm sure, enlighten me a lot more than what I've just been able to figure out on my own. But my understanding is that those yields are just, I mean, they are very much because of what Yoni was talking about earlier with the over leverage, right? So it's because there's leverage on top of leverage that they're able to have these yields. Whereas there's other stuff you can do that's a lot more like traditional banking, but is very secure because they're collateralized by, they're not letting people leverage, right? If you want to borrow $1 million, you got to have $2 million worth of Bitcoin collateralizing that, right? It's for people that don't, and more in traditional finance, for people that don't want to, they don't want to sell their Bitcoin, but they want to be able to leverage it. They want to be able to, get some cash out on it.
Yeah, well, Yoni could speak to it and give.
Yeah, so on Radium, in this specific situation, you cannot leverage up. So in other words, here you need to have cash to play, and by cash I'm talking about whatever tokens that are part of the ecosystem. Now the issue is that effectively there are separate other ecosystems where you can leverage up. So in other words, you can effectively take your wallet, connect it to a leverage platform, put your collateral down, take out whatever other token that you're getting, at some sort of leverage, then take that token and then you can play it with it here. But the system itself in this situation is not leveraged. The reason there is so much yield is just, it's literally just a function of supply and demand. I mean, similarly right now, technically right now, let's say something like on FTX today, because of all this craziness, the lend rate went really crazy. I mean, it was something like 300% for a period of 2 hours, and there was even 10-minute chunk that the lend rate was 3,600%. So this actually, when you're talking about 300%, I mean, let me see what it works out to be. It's like, because this 300%, it's actually APR that pays out per hour. So technically, if you compound it, it becomes out of this world. I mean, it's probably like, if you compound it, depends, I guess, on what amount, but it's probably 1,500% a year, let's say, if you compound it monthly. So, it's just a whole other game, and these ones are just dynamic rates that can change. So let's say today, the reason, let's say, if I'm looking at the Radium pools, I mean, you're talking about an APR of 200%, something like Ethereum, USDC liquid pools. I mean, the reason it's that is because today there is just a problem with liquidity. So everybody's trying to liquidate USDC Ethereum for USDC. Similarly, people are trying to buy the dip in the opposite direction. So there's just lots of action. And this APR is calculated by taking the last 24 hours of fees, dividing it by the liquidity of the pool, so the pool size. So, but the point is that it's just everything is so new, and there's just a lot of opportunities. So you can earn a decent APR without actually leveraging at all. But
Got it.
when
But
you
I
talk
thought
about
the issue was not you leveraging so much as what your coins are being used for, and the reason that they're able to pay you so much APR. So your coins that you're lending out in exchange for this APR, right, for this yield, is they're being lent out in a very risky fashion.
Okay, so so let's say in FTX, the coins are specifically lent out. So that, first of all, there is no margin on the lending itself, as far as I can tell. It's being lent out in exchange for people being able to trade on leverage. So somebody has, let's say, a 50x position. So effectively, they're trading at 50 times the capital that they have to trade. Let's say, they have $50,000, but they want to trade as if they're trading 2.5 million. Now, at the same time, to make that happen, they have their own, let's say, collateralized Bitcoin on the platform, or Ethereum, or whatever else, and there is some sort of ratio of value to value of the total coins that you have versus the value of your collateral that they need to maintain. Now, the thing is, in that situation, there's technically, at least on that platform, there is no risk from that perspective, because they automatically get liquidated the moment that the ratio doesn't match. And so that means the Bitcoin price can go down, whatever the US dollar. But
if they have 50x, you're saying that they have 2.5 million at least worth of Bitcoin backing their trades?
Yes. Effectively, the only way to do it, you need to be effectively, your collateral needs to cover the full amount that you're playing with.
Got it.
And they'll even let you loan out that amount. But the moment that there is, there's a threshold that you cross, you get automatically liquidated. So from that perspective, there is no risk, because otherwise you wouldn't be able to lend that cash out. Now, with some of the decentralized exchange versions, it gets a little bit trickier, because first of all, it's slower. So in a dynamic market like this, it's harder for this to play out. Actually, so something like Solana actually could work better for this, because it's just so much faster. But there you could run into issues. But what we're talking about, what JT was talking about with Radium, those are just pure liquidity pools. So there's actually, the only risk that you enter there is the risk of impairment loss, because you have two separate assets that you're tying in together. So if, let's say, for whatever reason, let's say Ethereum got hacked, or there's something major like that, and you have the liquidity pool of BTC and Ethereum, all the trades are going to go one direction, of people putting in Ethereum and getting BTC out. So there is, really, when you're putting money into the liquidity pool, you're almost investing in those assets simultaneously. So it becomes kind of, so there is a risk of impairment loss, but obviously if you kind of like do liquid pools of kind of like these behemoth of coins, then the risk is lower. And similarly, there is a lot of the liquidity pools that I personally like are the ones that are, have fiat on one side of it. So, something with USDC or USDT. So in a way, it's kind of like becomes an interesting hedge, because you have kind of like, obviously, it won't go up as much if the coin that the other side of the trade is going up a lot, but it also can't go down as much. In the meantime, you're generating yield. So that's interesting.
And and not to cut you off, because this is what I'm talking about, though. We are down the rabbit hole. This is what it's all about. And and also too, I mean, the risk, you've got exchange risk, right? If something happens, for example, to the Radium exchange, and this is where I think you're also putting faith in the folks that are operating the platform, right?
Right.
And in this case, there's some of the smartest folks in crypto. And look, just to always make the disclaimer, none of this is investment advice. Like, we're playing around in the space and doing what we're doing. We're not affiliated with these dudes. Like, at the end of the day, like, we're just customers and just out here just doing our thing. But, but you have exchange risk, which, and then also, like Yoni said, I mean, if you're tying it to these coins and the coin drops a ton in value, right, then, no matter how much yield you've made, if the underlying coin has dropped by 50% in the amount of time that it's sitting there, then when you pull it out, you will have lost a bunch of money, almost regardless of how much yield you've made. And depending on time and everything else. You know what I mean? But
Right.
so, and also some of this is also just so new, you know, that it's
Right.
like,
That's the hard part. And so I don't know, like that's what I'm kind of looking into is more the safer,
yeah, 100%.
you
Well, that's
know,
what I was talking
looking
to
at,
Yoni about. That's what we were talking about this
yeah,
morning. I was saying, like, if this stays consistent, right? But it's a lot to ask to say if a year from now this has remained, you know, active and stable, you know,
right,
but a year in crypto terms is like, we're talking beyond dog years at this point. You know what I'm saying? Because
right,
everything is moving so fast. And,
right.
but you know, but I do think that for me, like what we've seen, and I know, like I was saying, Drew's pretty hype about this. Like, you know, Yoni's been, you know, kind of schooling us to this, is, you know, digging in on his own, and you know, and he's in some other directions that are even more complicated than my, you know, frozen caveman lawyer brain can understand. You know, but it's like, but it's really pretty cool when you talk about safe compared. That's the other thing. It's also like, you know, it's a matter of context, right? You know,
Yeah,
if doubling your money is, you know, in some cases is actually safe compared to, you know, your Dogecoin, you know,
right.
6,000%, you know, return, right? So it's like dumping money into some of these shit coins. And I was going to say this before, some of the other coins I saw get named, you know, it's like ass coin and MILF coin and shit like that. It's crazy. Portnoy, Dave Portnoy, Barstool, you know, like he just, you know, threw his allegiance at Safe Moon because he's trying to, like, you know, like he's like, I want to be like the face of a coin, you know. So he had all the hats, like he was selecting what school he was going to pick, like if he was an elite, like high school athlete, and you know, he's picking
Wow.
up the different hats that all have the different symbols, and then finally he's like Safe Moon, you know, and that's like his shit now. And but you know, for some of those are so speculative, but the, you know, the ceiling is crazy high, right?
Right, right, right.
When you're
But
investing into these things, but you know, which are a little bit more traditional ish in nature, you know, I think that, you know, that's also the thing, is like it's less risk compared to some of that, but also less return, so it kind of evens out. But go ahead.
yes, it's definitely less return. And I think my strategy is going to end up being somewhat of a hybrid, right? Like I will definitely play around with the stuff that you guys are talking about, because not as much for the money. I'm more interested in learning about it, because I definitely believe that is the future, right? And just to learn about it now makes a lot of sense, because then you can see things coming a year or two or three from now, right?
100%.
And and so that's really the reason, right? And so I would definitely advocate for people that are interested to take a portion, maybe not all, right, but maybe a portion, and play with it. And just like we always say, right, it's not investing advice, so it's money that you can afford to lose, hopefully, right? And then the stuff that you don't want to put at risk, then put it into a more traditional option. And it's not like what I'm talking about with Gemini, for instance. It's kind of like a hybrid, right? It's taking the traditional banking model and applying it to crypto. So you're still getting a much better yield than anywhere else you can, and you're not having to sell your coins, and you're able to generate some returns on it.
And that's, I think, the key point, right? And this is why I think traditional banking should be super shook, because I'll tell you right now, when you look at as these products are developed, and you know, they eliminate some of the risk, and they, you know, but the return is still going to be really healthy compared to, you know, what, you know, your savings account that makes you this nominal 0.02% bullshit or whatever, right? When you've got, I mean, but you compare it to moving money into, you know, and again, as these become more sophisticated, more accessible, and more user friendly, right? Because for me, you know, in the US, we're limited in some of what we can do because of, you know, the rules and whatnot and regulations. You know, so that's what I think is also an interesting dynamic with crypto. That is, I don't know how often it's really talked about. I don't hear about it too much. Is that, you know, it's creating a shift, a balance shift where, you know, I think it was Max Kaiser, one of these guys was talking about, oh, we've made all these people rich. Nobody in the US though. Like it's all people that
Mm-hmm.
are, you know, in Europe and, you know, overseas,
In
because
Portugal.
exactly.
Yeah.
Dude, Portugal's where it's at, man. I'm booking my flight like tomorrow. And well, the Solana conference is coming in Portugal in
Yeah,
November.
it's in November
We are
Oh
going to,
wow.
we're going to be
in
posted up,
Lisbon.
man. We are going to be
Let's,
doing our thing,
all
man.
right, I'm down. I'm down.
Yeah, we're making it happen, man. And so yeah, so but I think that's interesting. But anyway, but you know, but as it evolves and as it gets, you know, easier to access. So again, it's even more challenging for us. I mean, we've got access to some of it, but not all of it. But But even the stuff we have access to, you know, it's like you got to move from this wallet to that wallet into that exchange and connect.
Well, and the reality is that that's why also the decentralized aspect is nice, because there are no limits. Effectively, it's, you know, the equivalent in the real world. Like, let's say, you know, like back in the day, it was even possible to do, before all the banks were kind of like interconnected through a digital network, it was even possible to do Forex arbitrage. You could literally go to a bank, take, let's say, $10,000, exchange them to euros, go to a different bank, exchange the euros back to US dollars. It was possible to make margin in between.
Yeah.
Now, I mean, obviously it's not possible these days anymore, but this is the equivalent of what's happening in the decentralized world of crypto on the DeFi level, but just the moves that you can do are much more dynamic. You can do a lot more, and also the main part is that there is no KYC every step of the way. You're literally just going with this cash from one place to another, but really instead of cash, it's a digital wallet that you control, and you know, effectively everywhere it becomes more. I mean, the way I see the future is that everywhere, everything becomes more of a community rather than an individual business with a centralized control point. You know, like in other words, because even to start these as a business, it makes more sense to do it because, you know, this way you never even have to bother making it so big that you can take a company public. The company itself has immediate liquidity at all points. Kind of like in the process of the company, there's some, obviously different protocols have different lock periods, different distributions of tokens, you know, some to employees, some to founders, some to, kind of like as part of the emission of the protocol and so on. There's all these aspects and it can all be programmatic rather than relying on the third party that will be some sort of centralized party like a bank or a government organization to give you some sort of okay.
Yeah. Well,
so let's follow up on that for a sec though. My understanding, or the way I look at it though, is the point of DeFi is to take traditional finance instruments and models and decentralize them, right? So what I'm saying is I don't understand the reason. It seems like a lot of these tokens, not all of them obviously, but a lot of them aren't there to actually do anything of utility. They're there just as a money grab, right? And so at some point as DeFi becomes real, right? And you could argue that it's getting there, but it's not there yet. But it's at some point when it becomes more real and more widespread and more, I don't know, just more better formed and like safer and better organized, these crazy yields go away or become much, much less, right? Because now DeFi is gonna, at some point in the future, is gonna become like you get your mortgage and you do it using DeFi, right? Using some organization that's on a DeFi protocol. So it's just gonna become, it's no longer gonna be a DeFi mortgage, it's just gonna be your mortgage, right? So it's gonna look more and more like what we see today, but it's gonna be decentralized and more efficient, and maybe fees are lower. But what's happening now, in my opinion, is these people are creating these coins and these protocols for no reason other than just to make money and, you know, to do the arbitrage game, right? And I think that while that'll always be there, that's not the ones that are going to be kind of the ones that go and win. Like Solana, it seems like, is trying to do something real, right? And Ethereum is doing something real. These aren't just money grabs, right?
Sure.
But Shibu and Dogecoin, they have no utility.
Well,
so I don't know. That's my issue is that I don't see, other than making a quick buck, I don't see any reason to hold any of these coins.
Well, so let me just interject. I mean, yes, I agree with everything that you said, but the difference is that Shiba Inu is not really a DeFi coin. I mean, they're just trying to wrap it up as that, but that's not really the function there. So Serum is DeFi, you know, Ray is DeFi, but Shiba Inu is more, they're really trying to launch a meme coin in a different way. So it's not really that function. But let's say just
But
the
is there any
concept.
fun? Is there any function to it? Like, is there any reason?
But yeah,
No,
For
I don't know,
I
but
don't.
this is
Yeah,
not
I mean,
what
so
let's
real
say I'm
quick.
talking about when I'm talking about DeFi. So let's say
Yeah.
the main thing I like in DeFi, I mean, there's two aspects there. One is the whole lending aspect. So that's
Mhm.
great because I mean, this will make a whole market just even being able to leverage different positions
Right.
one against each other, arbitrage it to the point that the market becomes more efficient and so on. That's one. Second one I like, which is the one I'm mainly interested in actually, is the aspect of liquidity pools. Because liquidity pools really exist to power a decentralized exchange, right? Because let's say right now you're doing a trade on, let's call it Binance or Coinbase, all the margin goes to the exchange, which is fine because a centralized exchange also offers a service. Effectively, it's almost like an exchange and a custodian service in one. So
Mhm.
people who are both don't want to take less of a risk if they're not sure about how it works, and if they're just very new to the whole sphere, they won't necessarily do DeFi through a decentralized platform, so they prefer a centralized one. And hence, like effectively, the margin goes to the centralized platform for, if you want to call it, managing the risk, and also kind of
Oh,
just having a brand.
wait, hold on. He's out from under the bed. He has decided to
He's got to
join
put.
us.
He's got to button up his top.
He's
Button on his
like,
shirt.
he's like, oh man, all right. They got him. They were able to
like,
get him out they were getting him out the closet. They said it's gonna be okay. He saw Bitcoin was getting back up to 38. He said,
Listen,
you know what?
I was up on the 5th floor. I was on the ledge, and I thought, well, it's not worth it. I'm going back. Going back.
Yes. Woo! All right, what up? Our fearless leader has returned. This is what I'm talking about.
Yeah.
So, what is up, dude? How you doing, man? You doing all right?
Oh man. Well, actually, I'm doing great. My parents just arrived in Portugal this morning, which is why I wasn't planning to be on the show. And they brought some carnage with them. And
Oh, man.
yeah, so they arrived. Their plane arrived at 5:30, and I woke up. I was really anxious because I didn't know if they were going to be able to enter Portugal or not. So I was already up at like 4:30 in the morning, and I opened my phone, and Bitcoin was down to like 38 grand, and I was like, oh shit, I'm gonna smash a buy. So I started buying, and then next thing you know, fucking free fall all the way to 30.
Oh man.
Yeah, it's funny because we talked on the phone right after, and you're like, yeah, I bought it at 38. I'm like, wow, amazing, it's 41 already. And then literally an hour later, it's like 32.
Yeah. And I left with them. We were out to lunch. I literally just got back. We were out to lunch. And I'm sitting there at the lunch table, and I'm like looking at my phone. I was like, oh. Actually, the guy, Yoni, him, George. And he's like, did you see how low Bitcoin went? I was like, yeah. He's like, no, just now. Did you see? I was like, what? Well, how would it go? He's like, it hit 30,000. I was like, oh. I was like, man, do you know how expensive this lunch just got?
Oh yeah.
Get money. Get money.
Media Options is the industry's leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, Media Options offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. Media Options believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
So we are obviously talking a lot about today, the crash, the crash of 2021, and then we were getting into some talk about DeFi, and we were actually just drawing the distinction. So Ammar made the point to say, hey, but you got a lot of these coins out there that have no utility, and and that being a concern of his, and it's like, obviously a distinction between the Solanas, the Radium Serum on one side, and then you got the Shibu, you know, Uni and the fucking, you know, and all the other coins, the Akita, the Hook, and all this other kind of stuff. But, and the point that I wanted to make is Yoni started getting into it even on a more technical level. But at the end of the day, Shibu was literally created like to, as a way to grab cash, seeing that Doge blew up. Doge was created as a joke. You know, it was memed out to where it became so popular, and it obviously everybody got in, and the exchanges started picking it up, and Elon Musk and everything else that happened with Doge. And you know, but one of the things that I think remain for me, you know, is the creator of Doge. Somebody tweeted at him because Elon was like, "Yo, I'm talking to the you know, after he did the whole shit where he said, hey, we're not going to accept Bitcoin, but I'm talking to the devs, the Dogecoin devs, and there's some real promising shit there or whatever, like, you know, energy usage and all that." And
what's interesting to me is that as far as I know, there are no Bitcoin.
That's I think the joke that everybody that's not in the crypto community missed on, because they understand there is nobody behind there.
Like I don't think anybody gets it. Like, all right, like you just got to put this thing in perspective. Everybody's like taking this fucking guy so serious. He's the richest man in the world. He doesn't give a fuck about any of this shit. He doesn't care at all. Not even one fucking drop of give a shit. None. Zero. And so he's just trolling everybody. He's literally sitting up on top of his mountaintop in an Adirondack chair. And he's like, I'm going to troll the whole world. And he's fucking, I mean, he's in God mode in terms of trolling.
Yeah. And well, and the thing is that they had, somebody had tweeted at one of the Doge creators and said, hey, did you guys consider energy consumption when you created the coin? He's like, dude, I created the coin in 2 hours. I didn't consider anything.
Anything.
You know what I'm saying? Like, and that's the thing. Like, so that's the difference, right? It's like, you've got the meme. Those are truly the shit coins, right? The meme coins. I mean, they are literally have embodied the term and the ideal of a shit coin. And then on the other, and they're not DeFi, you know what I mean? Then on the other side, you know, and the shit that we're excited about, or I'm excited about, you know, is when you look at everything happening like Solana, FTX, like the Radium, you know, liquidity farms, all that kind of stuff, you know, that shit is where, you know, that is going to redefine finance as we know it. And even more to the point, when they make it more accessible, easier to get, you know, to use, they're going to be able to gamify some of this shit. Like when you farm, when you harvest your yield, like you literally have to click the button to harvest the yield. Like that shit is like cool. Like they could turn that shit into a fucking game to where like, you know,
I'm picking my potatoes.
Literally Farmville, but you're getting paid in like, you know, you're getting coins as you're playing. But instead of it being some weird game token that has no real value, you're actually like earning real money. I mean,
well, this is Chia, right?
Of value, you know?
Chia.
Well, that's just another, what?
Chia?
Yeah. I just heard about Chia like yesterday.
Yeah, I'm not too sure what exactly the mechanics there.
Is it like a chia pet?
So
no, it's another farming. It's farming.
Oh yeah.
Okay.
So okay.
Well, I get it. Is it kind of like, remember the chia pet? Remember that shit? Like you literally just take like the little thing and pour some shit on it, and then it would like grow like hair or something. You know what I'm saying?
Right.
Yo, it's crazy, man. We're in like, this is the new frontier, man. Like, you know what I mean?
But also, you know, like just to go back on the whole meme coin thing. I mean, there is the angle that this is maybe the worst aspect, or it's kind of like the most ridiculous or dumb one. But, you know, I've seen somebody who made a whole portfolio of dog-related coins. So he had like a portfolio of 100 coins. He put in $200,000 in. And he just split across all the various coins that nobody has ever heard of that are dog related. And, you know, and he made like $5 million. So like, you can look at it in terms of, this is either, you know, it's like this meme where the low IQ people and the high IQ people think about it in the same way, that this is a great investment. And the medium IQ people, they're just like, I don't get it.
The majority of the bell curve, you know what I mean? Or just like, it's passing them by. You either have to be so smart or so dumb, you know what I mean? To like, to do it. But yeah, I mean, hey, look, like, you know, and this is the thing. It just shows that there is a want, a need. People will put money into this shit if they think it's either cool or it could have a return, or all this kind of stuff. And like, you know, every time there's these bull runs, we saw it in 2017, we're seeing it now. Like, you know, people are coming out of the woodwork being like, yo, I want to get in. I want to get in. How do I do this? What do I do? And as that happens, you have some of the smartest people now in the world, like focusing and working on different things, from NFTs all the way through to the DeFi exchanges, all the way to, you know, the shit coins and everything else. And it's just like everything will continue to evolve and kind of do what it does. And I think as that happens, again, the stuff that's going to be done well, that's going to actually be able to provide, like you said, to your point, Ammar, utility and value in a real way, you know, are going to win. And without a doubt, it's going to eclipse standard banking as we understand it, because, you know, timing, the set, how long it takes, you know, to send like 7 days. Somebody was complaining, a buddy of mine yesterday was like, you know, send a wire to Coinbase and it took 7 days for them to get the wire, right? And then they're transferring Bitcoin.
Well, that's because they have to, like, that's like KYC related stuff. But
KYC is one of the limits.
No, right. I totally agree with you. And I do, you know, to follow on with what JT's saying, yeah, I think the ones that win do have to have this utility. But at the same time, and, you know, there's always going to be this, you know, fringe stuff, and there's always going to be opportunities to make money. And fuck it, I mean, I want to make money too. Yeah.
I'll buy all the shit coins. I don't care.
There's a lot of people making a lot of money in penny stocks. I mean, it's no different, right?
There's always going to be the fringe, right?
90%, you know, my old boss in the seafood business, he used to say, there's a lot of money to be made in the gutter.
Yeah. Charlie Tuna, man.
You know, it doesn't matter what industry you're in, right? I mean, you got in the domain industry, you know, let's tie it back to domains. It's like, look, I know guys making a shit ton of money with, you know, 30,000, 50,000, 60,000 domain portfolios. You send me the portfolio like, hey, any names you're interested in? I look at this thing and I'm like, I wouldn't buy a fucking name in that list. Not one name. Right. Not even for reg fee. But these guys, you know, they flip them for 5x, 10x. They're buying them for $8. They're selling them for 50, 60, 75 on a regular basis. You know, they make money.
Right.
There's a business, you know, there's a business.
I mean, there's a bunch of angles to kind of, I guess, you know, make for yourself even, especially because in this DeFi thing, I think people are misunderstanding what this even means. Just the ability to have completely frictionless ability to move value from point A to point B. This doesn't exist in the current financial system. Let's say I want to buy a stock. What do? I can't even go to the centralized stock market. I have to find an intermediary, a brokerage, to allow me to buy stocks. And some of them, like most of them actually, I won't actually own the stock. I'll own an IOU from them. Like the whole thing is actually really bizarre if you think about it. Because it's actually all a game, and every step of the way, you're actually just getting permission to participate. Here, it's permissionless, it's frictionless. You can move from point A to point Z in like all these 20 different moves and make yield along the way, you know, like solve other people's problems effectively. I mean, just the concept of liquidity pools, or like something like an AMM, like an automatic market maker. You know, like you even have, like, it's funny because even in crypto, you have kind of like these layers, one layer deeper than the other. So people who are in Bitcoin, a lot of times, let's say if they're maximalist, they'll find one angle and they'll be like, holy shit, this is so much better. They'll dive into that. And I mean, from the normal financial system, people find out about Bitcoin and kind of go that direction. But, you know, like, so even something like, let's say a company like BlockFi, that's, you know, considered to be kind of like, you know, a happening company, it's on the edge and knows all this shit. I mean, they effectively 1%, they pay yield on, they pay 5% or something like that on up to half a Bitcoin.
Half a Bitcoin, yeah,
now,
half a Bitcoin.
So really, because this becomes
that's it. That's the max.
No.
That's
it's half
the max.
No, it's 5%.
That's the max.
Up to half, and then it goes to like 1% or 2% up to 5 or something, and then it goes to like 1%.
It goes 2% up to
1.5%.
2, I think, and then
1.5 is the cap.
Half a percent.
Okay. Well, that's why Gemini is.
And what are they lending at? What are they lending at?
Well, they have their own pools, I think, that they're lending
so
out.
that's an example of a hybrid of current financial system and the new one, because what they do is they lend it out. First of all, they lend it out to other people like you, who have collateral and they want to, again, like use this capital to trade on leverage without selling Bitcoin, for example. But unfortunately, the main customers of theirs are big organizations, and they let it out to them, and you don't even know the leverage that's going on.
No. So, Yanni, listen to that podcast that I was telling you guys about, the modern finance. And there was the most recent one, the most recent episode, he had the CEO of BlockFi, the founder, and he had the main trader at Genesis, which is the custodian and backer for Gemini plus a bunch of others. And they talk about the collateralization. And it was what I was saying earlier, I think it was before we started recording, but they treat it like traditional finance. Okay. And they're looking at the collateralization, and depending on what your use case is for your loan and your other assets, your reputation, this and that, they are always going to make sure that there is more than sufficient collateral for the loan. And it could range, they were saying, up to 125% collateral, right? Or maybe up to 150.
But what happens? But the problem is that system, because it's still a legacy style system. It's working based on previous rules. Like, what happens like today when Bitcoin fell? There was a time that Bitcoin fell, let's say, 40-something percent.
40%, yeah.
So
well, it's automatic. It'll automatically liquidate.
But that's for individual buyers or individual lenders. I don't think that happens to the institutional lenders that do it at that level.
It does, because
and it's gone.
You have to see. They do, even with the institutions. They'll have rules in place. They'll tell them like they need to make sure you can either cover or not. But they have like cutoffs where it will just liquidate.
Okay, so it's automatic liquidations, not a manual process. Okay, right. But either way, for example, I'll just show you how ridiculous this whole process is compared to something like on Binance. They actually have these weird, Binance is a centralized exchange, but they want to compete on the decentralized exchange side as well. So they have liquid swaps, which is effectively liquid pools that you can do on Binance. It's kind of like, if people want to play around with liquid pools, maybe that one is a good one to start. But let's say right now, there's a liquid pool of BTC and WBTC, so RAP BTC. So effectively, they have an almost identical value. So the liquid pool, which effectively caters to people trading from one to the other and backwards, right now, the yield on that is 6.29%. So that's effectively risk-free, because you're only risking a liquid pool truly is the impairment loss. But since it's really the same asset, there is no impairment loss. And that effectively, that just shows you how ridiculous the whole concept, even of the lending, that's like a hybrid legacy one. They won't even be able to compete with that. This might happen so fast that they just won't even, like, it's almost like, even though they're the company that's the innovating company, there is somebody that's innovating on their back so fast that they might just end up being like that.
Irrelevant.
Like whatever came after Blu-ray, in terms of innovation, because then it just went to streaming and all of that was useless.
Right.
And I was going to say before, because Yoni, you were on a roll when you were talking too about the whole point about it being frictionless and open and easy. And like, I was going to say, Young Money is talking that shit, because it's really true, because when you look at all the benefits of this shit, like when you're trying to just trade stocks and everything that you're trying to, you don't even need to open an account necessarily to get busy with some of this stuff. You just go on and create a wallet, and that doesn't require all of this stuff, and I understand, you got, a contingent out there that's like, hey, but all of this openness and frictionlessness creates, bad actors the ability to do shit that they shouldn't be able to do. But it's like, but if we overcorrect so far on all the KYC stuff, it's one thing if you're trying to protect your customers, but it's another thing if it's like, you've created gatekeepers for regulatory purposes, or just for the purposes of like, making it so that the brokers make sure they get paid. You know what I mean?
Right.
Yeah. And it's like, nope, we don't need you guys anymore. You know what I'm saying? Big banks with like big buildings and like offices and all this extra shit, like that costs all that bakes in all of these costs and takes the money from the people and instead and gives it to, the suits, it's like, nope, we don't need that shit anymore. Like, and
Right.
that's where
So
people, are
yeah,
going to gravitate towards it. At the end of the day,
to
man, it's gonna happen fast.
right, to disintermediate those guys, the middlemen, that makes a lot of sense, and that's gonna happen, right? But there's always gonna be a middleman. There's always gonna be somebody that's gonna find a way to get in the middle and to make some money on it. That's just the
Yeah,
nature of the world.
but the difference is that what does the middleman represent? So it can be a single entity or it can be a protocol.
Mhm.
So in other words,
Okay.
let's say you want to send me BTC, technically the middleman between us is BTC. So you
Mhm.
see effectively the protocol itself, like it becomes almost like, like I don't even know how to explain it. It becomes almost like
So,
some sort
in
of
the
form
case
of
of BTC
socialism and capitalism hybrid.
In the case of BTC, that doesn't actually work. But in the case of other things, like his,
Okay,
in
but
order
let's talk
for-
about, like, for instance, a mortgage, right? Let's say you're getting a mortgage and out on the West Coast, you can't buy anything for less than 7 figures, right? So now you've got a real property of value. Are you going to put that out there? And like, I mean, that's a real asset that, so you want some kind of regulation or some kind of security to make sure that the person who's underwriting that mortgage is real, is like, I mean, I don't know. I just feel like with super high value assets, you want some degree of security, some degree of trust.
Yeah.
Right.
I trust software more than I trust any human being. I can tell you that much.
But how is
So
that
also,
like,
Ammar, what if it was
I trust
not,
Ruski with my
what if
life.
it wasn't a house, but it was 1,000 BTC?
yeah.
Okay, so
Right.
who do you trust to keep it? Do you trust to keep your bank to keep it for you, or do you trust to keep it in a cold wallet?
Young motherfucking money, son.
Yeah. Right. And so in that example, I guess that's a bit different. Because
but I'm just the point I'm making is that the reason that you trust the banks is because you have no other choice. Your real estate
Right.
is effectively, you're a hostage to your real estate because you have to abide by whatever rules they make up. Tax doubles tomorrow, you just say, where do I write the check? Come on, this is like the
you
only
have no
reason,
you have no alternative. You have no alternative.
Yeah, so they have effectively a monopoly on you. This is the whole point of this. Nobody has a monopoly. The value, like effectively, it gives more power to the individual. The individual owns these assets, truly owns them, because your house you don't really own. You have permission from them to own it. But let's say if instead of, let's say, I don't know what the tax property in Vegas is, but let's say it went from, let's say it was 0.5% a year.
Yeah.
1%.
1%.
Okay,
Yeah.
let's say it goes up to 10%. I mean, you just say, okay, like you have, effectively, it's almost like they're the business and you're their customer, even though you kind of own it. This doesn't happen with cryptocurrency. You own it and you truly own it. And I mean, obviously you want to own things that will have more kind of like maybe perceived true value. But the point is that these remnants of security, it's really just the way that the asset is structured, that you have no other choice. That's why it feels.
It's an illusion.
Yeah.
Yeah. Well, but I would argue that crypto is as well at this point. We all know why, because I mean, the value of yes, I own my Bitcoin and it's worth a lot of money, but it's only worth a lot of money right now because it crashed 40% and it went down to 30K. And what if it crashes another 50% and goes to 15K, right?
It's still worth more than it was last year. I mean, but that's not the point.
But but that is the point. The value of Bitcoin is perceived value right now, right? Like until
Do you think that a house in LA can't go down by 5%, by 50%? Because I can promise you that if they raise the tax rate from 1.5% to 2%, you lose 25 to 50% of the value of that real estate overnight. I can promise you that when interest rates within 3 to 5 years, when interest rates go to 3 or 5%, the value of that real estate goes down fucking exponentially. 30%, 50%.
And
everything is driven by the same economic and macroeconomic factors. The real estate isn't going up because there's more demand. There's less demand in LA than there was 3 years ago. But the reason the prices are going up is because there's fucking money falling from the sky with nowhere to go. And traditionally, since the 1950s, people have been tricked into believing that the way to store your wealth was in real estate. But it's an illusion. And the reason they created that illusion was to create profits for banks through mortgage and rehypothecation, and profits for taxes. It was increase the value of homes, gives the municipalities a way to increase their tax base, okay? Because government grows indefinitely until it's forced not to. And it created basically the backbone of the American banking system. After the 1950s, when they implemented this whole fucking illusion, that's when you saw the explosion of the banking system. It's all an illusion. You think that, oh, I have this brick and mortar house. It feels good. I own something. You don't even own it.
Hold on.
You don't even own it. You don't know.
Yeah.
Like,
But by the way, I'm not
saying
saying real.
No, I know.
I'm sitting in a
we're
house.
comparing now. We're like, it's almost like
money.
wait, hold on. It's almost like we're comparing real estate and crypto,
Right.
and
Which
that's not
is
really
not
the
what I'm
argument.
doing.
I think you can make and we got to jump, like we got a hard stop here in like 4 minutes. So, but this is dope, and this is exactly the whole purpose of this show. We are, like I said, we are down the fucking rabbit hole. This is what we're here for, and I love it. And but what about, and kind of to Ammar's point, right? You're saying, okay, you've got certain constraints and people that have control over your physical real estate in a way that it's prohibitive, and it's but what about the fact that your Bitcoin right now, if it's sitting at Coinbase or even in your wallet or it's on an exchange or something like that, like, don't you have factors at play there that have some control over your stuff? Like, you don't have full control? Is it that?
But it's voluntary. You're volunteering to put those assets with a custodian. You don't have to, but you're volunteering to do so.
You have no right, but with real estate, you have no choice. You're going to get taxed. You can't avoid the tax.
So tie it back to domain names again. So legacy root domains, right? One could argue we don't own those either, because you don't pay your registrar fee, you don't pay the ICANN fee, you lose it. I don't care what you pay. You paid $5 million for that domain. You don't pay your $8.97 a year. You lose it, gone. Nobody gives a shit about your $5 million you paid.
And one could argue that the domain value is also illusory, right? It's in a sense, right? I mean, we all know.
But I would actually argue that domain names, because there has been a lack of, let's say, we saw like in 2014, 15 with that Chinese boom, that was a pure speculative bubble, right? But domain prices are really driven purely by demand. If there's no, and demand can be measured, right? We can measure that through search. So the more demand, the higher the price.
It could, but it could change. I'm not saying it's going to. Again, I'm just playing
devil's. Function of value, though. That's a function of value. I don't care what asset you're talking about.
That's just a variance of the value.
Well, but Drew was giving examples of, like, if they raise property tax tomorrow to 2.5%, then your property value.
This is something that.
But you think that's not going to lower your property value?
No, I do. Of course, I do. But what I'm saying is, a lot of these assets that we're talking about, the value could change overnight with a lot of factors that are out of our control that we just don't see coming.
No. But there is a very specific difference. The value can change up and down on all of these assets. We agree. But who has control over this asset? Do you have control of changing your tax rate? No.
Mm-hmm.
Right? That's the whole point. Because I think whoever has control actually really owns it.
And I think that's a great place to end, because I think that does sum up some of what we're talking about, where y'all are my people, y'all are my brothers, you know what I'm saying? And we all agree that the value of these assets could be, based on a ton of different variables, right? And, but, the idea of control of the asset and, the fact that it, can be taken away or not taken away, I think when you talk about that as a key point and distinction of crypto and Bitcoin and things like that, is a really key point. I mean, it's sovereignty, right? It's sovereignty over what belongs to you. And, and that is a very important key aspect. So that's something I think we can all agree on as well. And with that, you know what I'm saying? We're going to kumbaya this bitch, and because we got to.
I want to continue this conversation.
Yeah, absolutely.
Soon.
Let's go. We do this.
After we see how Drew feels in about an hour.
Yeah, we'll see what's good. So, Anyway, with
All right,
that, because
guys.
we do have a hard stop. And so I want to thank you guys. You know what it is, man. As always, appreciate the time. This was exactly the whole point of why we started this show in the first place, you know, and it's all good, all love. And I want to say thank you to the audience for tuning in. Without y'all, there's no us. Thank you for tuning in here. We'll catch you next time on Domain Sherpa, where all roads lead to domains. And on this episode, if you notice, like at the very end, we didn't talk about domains at all until the very end, because all roads lead to domains. You get what I'm saying? You dig? All right. So with that, thank you all. We'll catch y'all next time. Peace out.
All right. See you guys.
It don't matter what you do, I will not